Here we go. All right. Well, hello, everyone. It is the third Thursday of June. I feel like every time we do one of these meetings, it's like, can't believe we're already to the next month. And it's like, I feel like we just did one yesterday, and now we're here again.
I
So
know.
it's Josh and Amber. We actually have some breaking news this time. We actually, not that we don't normally have breaking news, but we have special breaking news this time. Uh, Hometown Heroes is back. Finally. It's been, I know, it's very exciting. We've been talking about it and planning on it coming back and being told it was coming back, but just haven't gotten any actual confirmation until now. So Hometown Heroes is back. It's actually back now. Like, we can start registering loans, we can start having it underwritten. We can't lock anything or close anything till July 1st. But Hometown Heroes is back, which I'll, in the following slides, will kind of get into the nuts and bolts of what it is. But as always, I'm Josh. This is Amber. We're here to tell you all the things that are happening in real estate and mortgage. So, Hometown Heroes, what is it? We'll talk about the money first. This is the most important part, and probably the part that most of our audience care about. I'm sure the most is like, I don't care about the rules. Tell me what it is. So you get 5% of the total loan amount, capped at $35,000. So you can get up to $35,000 in assistance from the state of Florida. There's a minimum, and this is actually an important deal. There's a minimum of $10,000 that you can get. Now, the thing that's important about that is if somebody had a $200,000 loan, they'd get $10,000. If somebody has a $100,000 loan, they're going to get $10,000. So that 5% doesn't mean quite the same if in smaller loan amounts. You could get on a $100,000 loan, you'd get 10% because you get a minimum of $10,000. The money, it comes from the state of Florida. It is there's no interest on it. You don't have to make payments on it. So this money is free in the sense of you don't have to pay interest, but it is not free in the sense you do have to pay it back. And I always like to, and Amber, of course, we talk about this all the time. I always like to make sure that people understand what you're getting, and it's not free money. It is no non-interest bearing money that you can get, but you will pay it back, and you will pay it back if you sell the house, if you refinance the house, or, and we won't deal with this for some time, but when you pay the house off. So when you make your last mortgage payment, so you get a 30-year loan. It's what, this is 2024. So in 2054, you celebrate making your last mortgage payment, paying your house off. The state of Florida is going to say, hey, 30 years ago, we gave you 5% of your loan amount. We'd like that back now, please. So they will wait if they have to get their money back. So there's no scenario that you won't pay it back. It is not forgiven. And Amber, you wanna throw anything in there about that?
No, I mean, just like that's cool. And how many people do we know that actually keep their mortgage for 30 years?
Very few.
Especially, like, I feel like maybe our grandparents,
Yeah,
maybe some parents too, just like it's not that common not to. And this program, I feel like it's going to be really good for like your first time home buyers, people like that. So maybe you're looking for that starter home. You just don't have that down payment for. So use this starter home. We make sure, to get you a great deal on it. So then when you need to sell it in 2 to 5 years to get your next step up home, you have plenty of equity there to get this paid off, sell it, still have some money to take to that next home that could be a forever home at that point.
100%. 100%. Yeah, and it's really, this program is great for folks like you said that just need some help. You know what I mean? You got a good job, you got income. You know what I mean? You're working hard, but things are expensive, and it's hard to save money in the current world, or hard, I guess, harder to save money. So that's one of those things where it's like, if this is the route for someone to purchase a home, awesome. If you have the money, we'll talk about that and I'll math that out with anyone who would like to, but if you have the money and you don't need this program, there are reasons not to take it as well. But if this is the path to home ownership, it's a great path to move through. So again, 35,000 max, $10,000 minimum. It is a second mortgage, and we'll get into the nuts and bolts of it on this next slide. So there are some rules with this program. It's not just open to everybody. There are some rules. I do want to back up for a second though, and the very first versions of this program, you had to be a frontline worker. So you had to be in the medical field, a teacher, police, fire, military. They were the only folks that were eligible for this program. After the first two waves, they actually opened up to everybody, and they've continued that because they had really good success with it. So as of July 1st, this program is going to have $100 million. So there'll be $100 million available, which sounds like a lot of money, but it'll probably be gone in less than 2 months. It's going to go fast. I know I've got folks, and Amber, I know you've got folks, and there's lots of me and Amber's. Well, there's only one me and Amber, but there are a lot of some other loan officers and real estate agents that have clients that are going to take advantage of this as well. So the money will go very quickly. But there are some caveats to it. With this wave, again, they've continued what they did in the last version of this program. First and foremost, you got to be a first-time home buyer. You cannot own a home and use this program. You can't use it for investment. This is only for primary homes. There is a exemption. There's actually a couple exemptions in this program for veterans. Veterans, you do not have to be a first-time home buyer. So veterans are going to have a little bit more leeway than anybody who is a non-veteran. Because again, this program was originally designed for heroes. So they've kept some of that in these other waves. So you got to be a first-time home buyer, or you can't have owned a home in the last 3 years. And that's an important distinction, because if you owned a home 10 years ago, don't care, you're a first-time home buyer. If you have a home that you owned with a spouse that they still own, but you're on title, you're still a homeowner. So it is the technical term is if you have an ownership interest in a property. So essentially, if you inherited a home, if you're on title on a home, if any scenario you have an ownership interest in a property, unless you're a veteran, you're within the last 3 years, you're not eligible. Now, if you're unsure, if you want to get clarity on that, you can reach out to me, you can reach out to Amber. We'll help you figure that part out, but just setting expectations. If you're sitting in your house right now watching this, like, oh man, this sounds like a great program, unless you're a veteran with a certificate of eligibility or DD 214, this program is not for you because you are not a first-time home buyer. Anything you want to throw in there, Amber?
So we did have a question come through on that. They said, well, what if my dad is going to co-sign for me? He's not a first-time home buyer. Would I still qualify?
Yes. So the only folks that have to be first-time buyers are the actual occupants of the home. Okay. So we'll have some leeway there, that if you have someone co-signing for you, that's going to be a different animal. But anyone who's going to live in the home has to be a first-time buyer or meet that criteria of being a veteran or whatnot.
Nice.
Good question, though. A couple other requirements with this. You must work a minimum of 35 hours a week or full-time. I know some folks, full-time is 32 hours a week, which we fought this before with Florida Housing, where it's like, well, that's not full-time, but for medical personnel, typically 32 hours a week is full-time. But for the program, you've got to work a minimum of 35 hours per week. So if you can work 40 hours, but you work 30, you're not going to be eligible for this program. You'll have to get your hours up and consistently up. You can't work 30 hours a week and then it's like, hey, I'm going to apply for the program and start working 35 today. You know what I mean? So it's got to be a pattern of work there. So 35 hours a week, which most folks hit, but that's an important caveat with the hours. The next one is this one's sometimes harder to deal with than you'd think. So you must work for a Florida-based company or work in a Florida-based brick and mortar location. Again, veterans are excluded from it. But I'd like to use like Home Depot, for instance. Home Depot's headquarters is not in Florida, so they're not a Florida-based company. But if you work at the Home Depot in DeLand, you're fine. You know what I mean? So As
We
long as
don't
you
have
can
a Home
map it to
Depot.
you work in Florida. What's that?
We don't have a Home Depot.
Damn it. You know, when I said the
We
land,
have
I
a
was like,
Lowe's here. Home Depot's in Orange City.
okay,
Or Ormond Beach or Daytona. No,
okay.
Daytona Beach or Orange City.
I knew right when I said it, I was like, I think there's one in
I think,
Deland.
yeah.
I say I'm fishing in a
No,
pond in the
I
wrong
love it. My
pond.
mom works at Home Depot. I'm trying to move her down here with me. She's like, but I'd have to drive 30 minutes to work. And I'm like, I know.
Okay.
You can
So
transfer to Lowe's. Nope, nope, nope.
got it. Well, then we'll use Lowe's. So if you work at the Lowe's in Deland, you're good. But yeah, and again, that's something that we can work through when we do your initial consultation and kind of talk and try to qualify for this program. We're going to check those boxes, and make sure that you either work for a Florida-based company or you work for a brick and mortar. Now, where this gets really tricky is self-employed folks, because self-employed, how do we know how many hours you work? You work for yourself. So typically most self-employed people don't keep, like, I don't keep a timesheet of the hours I work. I mean, I work well over 35, and Amber, I know you do too, but I wouldn't have any way of proving that beyond saying, like, I mean, call me at 10 p.m. and I'll answer my phone and you'll know I've been working all day. So, yeah, so with self-employed, and I don't want to discourage anyone from working through the process, but self-employed is a little bit different because the things that we have to verify and the things that are required to be verified are kind of difficult to verify with someone who owns a business. So not to say it can't be done, but typically we're going to sort of pre-underwrite that file and make sure that everything's going to be acceptable before we move forward with a program like this.
But I like to point out too, like that's one thing I really appreciate about y'all is, you look at the whole picture because you don't want to get anybody's hopes up,
Right.
So like this is a great program. And if you're not sure if you're qualified, just talk to Josh and he'll go through all the ropes. And then don't get upset when he asks you for extra documentation or like ask you for stuff because he's doing it to try to help you. Because it would really suck for me to take you out shopping, us get under contract, you pay for your inspections, and you start putting money into the home buying process. And then it was something that, he could have looked over in the beginning and be like, oh yeah, definitely it doesn't work. Like, here's what you can do so it can work next year. Or, we can look at these other programs for you. So like, just know that you don't find that in all lenders, especially not the lenders where you can just go online and type in for a pre-approval or something like that. They don't look at the whole picture, and not to say there won't be an issue, but it's better to be able to have that whole picture looked at up front.
Amen. Yeah, and and of course we spend more time in the beginning than I mean, it'd be much faster not to, but like you said, I mean, it's not a good use of anyone's time or money, to have someone out looking for a house and they can't have it. And especially in this scenario where it's like you're planning on getting 30 grand in assistance. It's like, oh, just kidding. You have $30,000 in your couch cushions you can pull out and buy this house. So yeah, that
But
kind of
that
stuff
has
is
to go
great.
in a bank first. I just triple verified that with title company because somebody
Exactly.
wants to
Not your
pay
couch
actual
cushion.
literal cash for a house. And I'm like, you have to go put it in the bank first. And I don't want to put it in the bank. I'm like, I'm sorry. Like, just
Yeah.
unless you find a friend off the street that gives you a quit claim, but like not something that's for sale with a real estate agent.
Yeah. No, I know I've had that. I've had that where folks are like, I don't put my money in the bank because I don't trust banks. It's like you're asking the bank for hundreds of thousands of dollars. So I mean, that trust has really got to be a kind of a two-way street. So we're gonna have to trust each other a little bit, and it's gotta be seasoned in the bank. So yeah, Florida-based company, and again, veterans are excluded from that requirement. If you can't tell, veterans, there's really not a lot of rules for veterans, and that's really by design. You know what I mean? That's something that they've really made sure that veterans are this is easily attainable for veterans.
Well, and I
Uh,
appreciate that for him too, because just like, I moved around with military for 20 years of my life. Um, so every 2 to 3 years, we were moving somewhere else, not because we wanted to, but because the Air Force says move, you move. So
yep.
we usually bought homes in all those places. So like, yeah, we're not a new home buyer, but here we are, and so it's nice to still have, to not be excluded because they usually say they try to include veterans, but honestly, at the end of the day, like you fall like right in between the cracks of everything. So I appreciate that they're doing that for our veterans this
Yeah.
time.
Agreed. Agreed. Minimum credit score of 640. So, obviously the better the score, the better the rate, that kind of stuff, better odds of approval, things like that. Minimum of 640. You do have to take a home buyer's course. It's really not hard. It's a very simple course. I think it takes like 45 minutes, and it is typically the most basic course you ever see. I mean, it's a very simple course. It's like, if you don't pay your bills, what happens? If you get your paycheck and don't put it in your bank and spend it all, what happens? So it's very basic, but it's a requirement of the program. All buyers don't have to take it. Only one person does. So if you want to rock, paper, scissors to see who has to take it, fine. We don't care. Just somebody has to take it. We need a certificate. The debt to income ratio, max is 50%. That is important because like FHA, for instance, will go up to 56.99%, or it can go up to 56.99%. So it is going to be a little bit more restrictive in terms of how much debt folks can carry. So that's part of what we'll do in our initial consultation as well. And evaluation is determine what your debt to income ratio is. Manufactured homes is 45. So those are important things to sort of be aware of, because we've got to stay within those ratios of debt. And if you remember from a previous video, your debt to income ratio, there's two pieces to it. There's a front end ratio, which is the house. There's a back end ratio, which is the house and all of your debt. So the house and all your debt is the ratio that's going to matter for that. Is we got to keep it under 50%. A couple other pieces with it. There is income limits to it. I didn't put them on here because every county has different ones, so it'd be a really big, long slide. But essentially, in most cases, if the file makes less than 120 to 140,000 a year, you're going to be eligible. They changed that. In the past, it was like 90 grand. So they've upped it quite a bit. So even folks that actually make a good amount of money, you still may be able to qualify for this program. So if you've looked at this the last wave, if you've been in the market that long and still haven't bought, I know I've got some folks that haven't, you may be actually more eligible now than you think you are, or than you were when this program, the last time we had funding of it last year. So again, that's one of those, ask, let's get together, let's talk about that stuff. I can look at specific areas in terms of, Seminole County and Volusia County have different income limits. So we can look at that kind of stuff and really whittle that down to what works for you or where you're actually at. So that's I could keep going. There's other guidelines to it, but these are the most important ones. There are some minor ones in there, like a manual underwrite goes to 43% debt to income instead of 50. So there's other little caveats, but I don't want to get too far in the weeds with that in this. But if you have specific questions, or you want to get a better understanding of it, then if those that are of our viewers that have seen us before, that's the stuff that I enjoy doing is getting sort of into the nuts and bolts of what these things do and how they work, so that way we can make sure it's going to be a good fit for you and it's going to work out.
Yeah, I definitely like it. I'm excited for it. I'm excited that we can go out now and start shopping. And because you said we can go under contract now, they just can't lock the rate until after July 1st.
Correct. Yep.
So that means we can shop now and you can close the middle of July.
Yep. 100%.
I like that part. It's because I know when we were thinking when this was coming out, we were kind of okay, it's probably going to be July before you can officially, but it's nice to have this leeway now and, get out there while there's still some homes and there's still some deals to be made too, and if you're willing to go for the house that's a little outdated, but the bones are good, then you might even be able to get some assistance from the seller and then this assistance. So at the end of the day, you might literally be able to buy a house for nothing down, and that's unheard of over the past few years.
Yep.
So definitely get a hold of Josh, get that pre-approval, and then give me a call and let me know what amount you're comfortable, because you got the pre-approval amount. And then you also got what you're comfortable amount at. And with this program, I like that it's a 50% debt to income ratio, honestly, because that means half of what you're making you have left to have fun with life, you know, and like who can do that right now with their bills half the time? I mean, have you seen what rent is right now for
I
people?
know it.
So, I mean, it's exciting for me.
Mhm. Yeah, and it's, and I think too, to your point is in the past, I mean, the only folks that could buy a house with nothing essentially were veterans, you know what I mean? Because they get zero down loan, and then they get the seller to pay the closing costs. So,
And
yeah,
what's
it's gonna really,
important with that too, veterans, a lot of them don't realize, or other people, they're like, oh, they just get no zero down. They have a funding fee. And that funding fee gets financed into the loan most of the time because they're not paying it at closing.
yep,
So that funding fee is very similar to this, but it's not a second mortgage. But like, so their zero down is because something's going on with like there's extra money at the end of the day. You know, at
yep,
least like for us, every time we bought, we always finance the funding fee in. And then after your first use, the funding fee is actually higher for the next use. Is that still
yep,
true?
yep. They bumped it
Yeah.
up to 3.3% now.
Yeah, it's just like, you know, of course you get some disability in there. Talk to Josh, you can save with that. But like,
Yep.
you know, without, you know, and just I don't know. We used the VA loan. Our first one that we personally used was 2000. And we bought a $50,000 house. The prices haven't, you know, gone up since then. And the last one we used was 2019. So, you know, the different, but I remember that in between there, we bought some more. And it's that second time, I'm like, why is the funding fee so high? Like nobody told me that. Cause I
Yeah,
don't know if we would have bought that first house. We probably would have, because it was a great investment, you know, just
yeah,
you bought it, you fixed it up, then you sold it, made a little bit like in the 2, 3 years we lived there. But, um, it's nice to see that in a program like this. Yeah, you're going to have to pay this back when you go to sell the house, but you know, veterans have essentially been doing that all along anyway.
right. Well, and a big key with this is you're not paying any interest on it. I mean, it's so in that regard, you don't get a lot of instances where someone's going to give you, especially 20, 30 grand and not expect any interest back. You know what I mean? And
Yeah.
really not expect any interest back for a 30-year term. If you keep it, I mean, you're getting interest-free money for 30 years, which that's a lot of interest that would accrue over a 30-year period. So um
Yeah.
yeah, in that regard, it actually makes it a pretty solid loan. But I always like to just go through all the ins and outs of it in terms of what is and is not going to make the most sense, because there are other programs too. This one being back, and this one has a limited amount of funding. Of course, 100 million is a lot of money, but it's still a limited amount of funding. But
Well,
there are
yeah, because it's for
programs
the
that
whole
don't have
state of
any.
Florida.
Correct. Yeah, this is from the state of Florida, from Florida Housing. So yeah, I mean, I'm super excited about it. I think it'll give folks, some folks the ability to be more competitive, or those folks that had money for down payment but didn't have closing costs, that were losing offers because they were asking for closing costs and just getting shot down on that, where this could actually be the closing cost now, so they can be a little bit more aggressive on offers, or a little bit more attractive to sellers, that like, I don't need any concessions. And you don't have to make the minimum down payment. So for instance, if you want to put 20% down and want to utilize this program, you can do that too. You know what I mean? So there are perks to it. It's not like if you put so much down, you can't use this program. But again, it's like if you have 20% down, then I don't know if this program would make the most sense, because you can put your own money in and not have to pay it back someday. So, and again, that's the kind of stuff I like doing on a case by case with each client, because some folks, their goals are just different on what they're out to accomplish.
No, totally. And
Yeah,
then I guess I have one question for you
shoot.
before we wrap things up.
Oh yeah, of course.
Um, Over on the side of the screen here, you have you can receive lower than market interest rates for FHA, VA, RD, Fannie Mae.
Yep.
Is this program open to conventional loans as well?
Yep. Yeah.
Okay.
So there's really two sort of buckets to it, where FHA is going to go to the max loan amount. So FHA will go up to, if the max loan limits, or sorry, max income limits 145,000, FHA will go up to that. Conventional, it's going to go to, there's two buckets. There's over 80% of AMI, and there's under 80% of AMI. And AMI is area median income. So we're going to say Seminole County, let's say the area median income is $90,000. So if you're over 80% of AMI, you got one rate. If you're under, you have another one. So if you're under the 80% of AMI, then that's going to open up some really low rates, lower mortgage insurance. There are some really good programs there for Fannie Mae for the conventional side. So we'll look at that too, depending on what your income is. It's one of the things that I love most about my job is I could have 5 people apply at the same time on conventional loans, and all of them end up going 5 different routes because there's these little caveats that are going to make it different from buyer to buyer. So, but yeah, the rates are traditionally lower because they're actually set by the state of Florida. So Florida is going to set these rates, the lenders don't. So there's not as much lender markup in the rates because Florida is actually saying this is the rate that it's going to be for this loan.
And we won't find that until July 1st.
Correct. Well, so the lenders we have that are pricing it out now, they have basically we looked at one of our lenders earlier today, and they have FHA rates at 8%, which is way higher than they're actually going to be. But I think for the lender, they don't know what it is, so they're like 8%. So if you want 8%, you're gonna get it. But come July 1st, then Florida Housing will actually set the rates, and the rates come out every day. The lenders will post them, but we can actually get them direct from the state of Florida. So I don't need the lenders to tell us what the rates are because we'll be able to see those. But they're typically under market. So if let's say FHA's 6.5, Hometown Heroes through Florida Housing might be 6.375. So usually they're just a smidge under what market is, but they do set it that way on purpose.
Well, with that said, I have a great double wide manufactured home in Astor for sale for only 200,000. That would be great for a conventional loan using this program.
You get 10 grand. Yeah.
Just that little bit of stuff in there if somebody's looking for a canal front home.
Yeah. Yeah. We just gotta make sure your DTI is 45%, not 50.
Yeah.
But
yeah.
But I mean, it really, I've done quite a few of these loans over the last, 2 years that they've had this program, and it's a good program. I mean, it really is. It's not super difficult. I mean, it's pretty much the same. I mean, the FHA loans, this normal FHA loan underwritten that way, and then you just stack a second mortgage behind it. So you're not getting like a different loan product. So it's not like, oh, you're getting some weird FHA loan. You're getting the same FHA loan with this program or without it. The difference is the second mortgage is what they're going to put on it. So,
and you're being upfront telling everybody that this is a second mortgage.
right.
There's some people out there that the down payment assistance programs and stuff, like I've sat at the closing table with a buyer and they're like, why am I getting a second mortgage? Why am I signing this? And I'm like, I don't know. Like your lending side, I'm not privy to all that. And then
you talk to your lender.
yeah. And so then we call the lender and they're like, oh yeah, that's for your down payment assistance. So like, no, you never explained that. Of course they signed it because you get all these electronic documents.
Right.
Like I love e-documents, but at the end of the day, I don't think anybody fully ever reads them. So I don't think consumers are as knowledgeable in what they're getting into. I'm on the record saying that now, but like, so he's sitting at the table and signing, and so I appreciate having honest people, and that's something that you guys always get from Josh and I. Like, to a fault, we are honest and upfront with what you're getting into.
Yep, I have talked people out of doing loans before. I'm like, this doesn't make sense. I mean, it just doesn't make sense. I mean, now at the end of the day, it's your money. If it's legal and ethical, I'll do it. But this makes no sense. So, I mean, I learned early in my career that if somebody wants something and it's not unethical or illegal for me to do it, then that's my job. But there's times I'm like, this just does not make sense.
Yeah, you're not going to convince somebody to do something. Like, you're here to help them and do what they want. But at the end of the day, you're not pulling their arm and twisting it to make them do it. Like, it's their decision. And they just need the full transparency of everything that's going on. So, like, it's awesome to have assistance and help. You just pay it off when you pay the loan off. Easy enough.
Yep. And you just, sometimes people forget it's there. I mean, I've had folks where it's like they're selling their house and, they get their net sheet and it's like, where's all my money? And, because, I've had folks that bought the house 10 years ago or even doing a refinance, like a cash out. And I'm like, hey, we got to pay this off. And they're like, pay what off? Like your second mortgage, so sometimes folks forget I think to your point, Amber, I think sometimes they're not told, but I think other folks sometimes just forget that that they had that when they bought their home, because it was just a small little blip on a, on a major transaction kind of thing. So,
Yeah. And
um,
usually that gets, like you said, that gets paid like after your first mortgage. So like it's always sitting there either collecting interest, or like this one's not an interest collecting, but like it's always sitting there. So like
right.
maybe sometimes they think, oh, I'm paying my mortgage every month. So they think they're whittling that down too, where typically they're not.
Nope. Now you can, in that vein, and I'm glad you actually mentioned that, you can pay this sooner. Like you can actually make payments to it if you want to do so. You
Oh,
got to get your
nice.
servicer on how that's done. But yeah, you can actually make payments towards this if you want to. But I mean, realistically, if you're going to pay something off faster, I'd pay off your first mortgage because you're accruing interest on that.
Or your credit card.
Yeah. Yeah, exactly. Yeah.
But don't charge it up again.
I've done more equity lines in the last 6 months than I have in the last 8 years.
It's
Um,
crazy, right? It's just we're just
yeah.
a consumer, like we got a card, we got plastic, and the sad thing is a lot of those people are turning right back around in what you just helped them do and fix.
Yep.
They didn't change their spending or anything. So, but what's going to happen is we're not seeing home values go up as drastically as we have over the last 3 years.
Correct.
So here in another 2, 3 years, they're going to come back to you to do it again, and you'd be like, you don't have enough equity to do it, man.
I've
And
had people come back to me in 6 months, and
see,
it's
like,
like, so what I tell folks to do now, I mean, I can tell them anything I want to tell them, but it's their money, you know what I mean? So it's, there's that
we're
dynamic.
not financial advisors.
Correct. Correct. I have thought about, getting a license for that, but I'm like, you know what? I want to be really good at one thing. I don't want to be kind of good at two things. So,
Yeah.
um, but with that, it's, what I tell folks is, okay, like your equity line payments can be $500 a month. This is saving you $1,800 a month on your credit cards. Hooray. Pay $1,800 a month on your equity line. Don't pay that $500. Pay the 18. You're already paying it. And I know it's uncomfortable to pay it, but plan on paying that every month. And if you only pay 1,500, fine, but pay that equity line off. Don't run up your cards, because that's the worst case scenario. Like it's
Yeah.
I was guilty of that back in 2008, well, 2007, 2008, before the meltdown. I, I had two negative amortization loans, because I had a mortgage guy at the time that completely misled me, but I should have been smart enough to understand what I was signing. But I was rolling negative equity every month into my house. And the idea was your house will always be worth more than it is now. It's going to appreciate every year at 4 or 5%. So you're only rolling like 2% in. So you'll always come out ahead. I was like, makes sense to me. So I had two houses, and both of them were just piggy banks. And it was like you could do a refinance without any documentation. You could tell them I make 200,000. It's like, okay, 200,000, here's your loan. So but the thing is, when it got real bad was, one, when the economy went bad, but two, it was like, I don't have any equity in my house. I owe more on my houses than they're worth, which was a pretty sobering thing to come to that realization, where it's like, one, I owed like $90,000 more than that house was worth. So and you have to really start making hard decisions when you're facing that. So that's the key. And I know it's a totally different topic than we started with, but I think it's an important one. Is when you get to when you dump that debt, you have to live within your means. Like, you have to, if you can't pay cash for it, don't buy it. It's is where you have to live. um, and build that savings, because then you can buy things and you can, have fun. I love to travel. I love to do all kinds of things, but you can't finance it like that. You can't live that way. So yeah,
Yeah, no. I mean,
maybe one
that's
of our
us. We'll
topics
go
for the
off on our
future.
tangent. You're
What's
welcome.
that?
Go off on our tangent. Sorry.
But yeah, well, no, I was like, maybe this might be a good topic for a future meeting. You know what I mean?
Yeah.
Is you've gotta fight fiscal responsibility.
Yeah,
It's
maybe July. I mean, it'll be hot and miserable out, so
Yeah.
fiscal responsibility in an air-conditioned
Since you're
office.
so hot and cooking outside, let's talk about saving money. You know,
It really aggravate you.
exactly. Let's talk about stop spending. Don't close your credit cards. You can put them in a, like, it's funny. I have in my office. This used to be my son's Pokemon book, and now it has our credit cards in it. It's like that's where they go. So don't cut them up. Don't throw them away. Don't
Use them
force
every
them
now and
out.
then. They don't close them on you, but pay them right off.
Yep. Yep. Just pay them off and move on with your life. So,
Hmm.
so cool. Any other questions in there? Any other?
There's no other questions that came through.
Okay.
Oh,
Perfect. Well, then I think this was a good, and again, tangent, but I think it was a good tangent. So, Hometown Heroes, it's back. There's a QR on here if you want to scan that. That'll take you right to our page where you can apply. If you have questions, you can scan here on the bottom right for Amber. You can scan here on the bottom right for me. You can follow on Facebook. And yeah, I mean, we talk about this every single time. Ask. If you don't know, ask. If you don't think you're ready, ask. If you know you're not ready, find out for sure. So we really do try to be a resource for folks. And if you're not ready now, I had somebody that was very honest with me that was like, I've put this off for so long because I don't want the heartache of being told no. I don't want someone to tell me I'm not ready. It's like, but what's worse that's going to happen? If you're not ready, I'm going to tell you how to get ready. You know what I mean? Because otherwise, you're either never going to be ready because you're never going to find out, or you've been ready this whole time and you didn't
yeah.
get the house because you didn't think you were ready. So,
But
um,
there's a lot of just like falsehoods or stuff, and it's just because I don't know, like I had someone you can't buy a house unless you have 20% saved. And I'm like,
yep,
yeah, no. And it's like in, you know, we necessarily you're like, well, like duh, but it like it's our job to know that, and it's not their job. Just like I'm sure whatever their job is, I don't know half the stuff with it. So but if I
right,
wanted to learn and know, then I would ask,
right.
just we never I guess we're not judging people either because like most likely we've been in your shoes at some point in our life, just like your tangent story about like a negative amortization and stuff. Like
I was
we've been on this
idiot.
earth long enough and we've owned homes and got our own mortgages that
Yep.
between the two of us, there's probably if we haven't, actually personally been through it, we probably know somebody that has and there's more, I guess, empathy or sympathy with it too.
Oh,
So
1,000,000%. Yeah, it's like I don't judge people. You know what I mean? Like I've seen really bad credit. I've seen really bad finances, but I've had really bad credit and I've had really bad finances and there's life things that happen to just sort of get you there and so yeah, it's like it's not my job to judge. It's my job to figure out how to get folks what they want because really for Amber and for it's the only way we get paid. You know what I mean? Like I don't get paid to, oh, this person's credit's bad. It doesn't matter. It's my job to figure out how to get their credit to a place where it needs to be able to actually purchase a home. So yeah, I don't make any money to judging people and really there's no benefit in it. So um yeah, again, if you're not sure, ask. If you don't think you're ready, you might be right. But then what are we gonna do to get you ready? And do me a favor, if your lease is coming up, don't wait till like okay, my lease is like it's middle end of June, right? Don't call us like hey, my lease is up July. Like what do I do? Um, if you don't think you're ready, especially give yourself a 2 3 month runway to get to that place. You know what I
I
mean?
think 3 months is perfect because
Yeah.
remember when you pay a mortgage, you have at least 30 days after closing before you make that first payment. So a
Yep.
lot of times we're able to close you before your lease is fully up and give you that couple weeks to clean and move in, and then your mortgage is due when you don't have a rent payment due. So, and if you give yourself kind of the extra month too, we're not scrambling to try to find you something if you are indeed ready. I have some people are like, okay, I'm ready, but my lease is up and I got to find somewhere to go now. So we have a week. And then they're like, we don't like anything on the market. And we don't control what comes on the market. We control getting you there and getting you the deal, but not what's actually on the market and available for you to look at. So we want to
Right.
have some time to find that perfect thing for you.
Yep. Absolutely.
Cool.
Well, awesome. Well, I thank you all for joining us, and we will see you, feels like in 20 minutes in July. Like, because Amber and I will be
The
like, oh
second
my
half
God.
of the year.
I know. Yeah, it's ridiculous. Absolutely ridiculous. We are. So just to really get everyone nice and upset before we get off of here, we are 6 months to Christmas. So there you go. We'll talk about debt next time.
Yeah, are you ready?
Right, exactly. Talk about debt because that's where people are still paying off their debt from. So
Oh my gosh.
so cool. Well, thank you all for joining. Have a good rest of June. Stay as cool as you can out there because it's already summer apparently. And we will see you in July.
Bye, y'all.